Nigerian Sovereign Investment Authority says it will continue diversifying assets to drive returns and mitigate market volatility. The agency is focused on more basic facilities investments this year as it deploys the Presidential Infrastructure Development Fund. Lara Folayan reports.
The Nigerian Sovereign Investment Authority's financial performance for 2017 shows total comprehensive income dropped to 27.9 billion naira. Fundamental components of income rose as interest and investment income grew. Net operating income dipped owing to government's currency management policies. A slowdown in reinvestment of matured funds and rapid deployment of monies into infrastructure made higher operational expenses impact on performance.
Late 2016 into early 2017, the NSIA created a wholly owned SPV called NAIC MPK, NAIC MPK. This is a wholly owned NSIA subsidiary. The idea of NAIC MPK is to supply the raw materials needed to make fertilizer to blending plants. We had planned for this business to make 5% profit, but it actually was challenged by all the logistics issues. The conversations we're having are around all kinds of risk mitigation structure to ensure that we play the catalytic role of not only investing, but also bringing third-party investors into some of these roads.
The global market should remain volatile this year, but the NSIA says it is prepared for this. It has restructured its allocation strategy with an increased focus on domestic infrastructure. The Presidential Infrastructure Development Fund should drive its investment strategy going forward, as 50% of future contributions will fund infrastructure.
$650 million has been voted to the NSIA to enable it drive the Presidential Infrastructure Development Fund. With this, excluding returns we have made, it means now that the core capital injected into the NSIA by the government is now $2.15 billion. And the expectation is that we will see more injection into the Presidential Infrastructure Development Fund over the next 12 months.
The NSIA is responsible for building a savings base for Nigerians, provide stabilization support when there is economic stress, and develop infrastructure. The agency says 50% of its capital has been deployed across strategic asset classes of its Future Generation Fund. Its stabilization fund remains fully invested. Lara Folayan, TVC News, Abuja.